Welcome to the deep dive. You shared the source, and we're here to really unpack the essential insights.
That's right.
Today we're diving into a story that honestly sounds almost too strange to be true. It's about a company known for, get this, heat and eat meals.
Yeah, ready meals. Not exactly who you'd picture in this space.
And they're making this huge, colossal stride into Bitcoin.
It's definitely got people's attention. We're focusing on DDC Enterprise. They're based in Hong Kong, but listed right here in New York.
Okay.
And the source article we're digging into lays out their, pretty significant recent Bitcoin move and what it might signal about bigger shifts happening, particularly across Asia.
Right. So our mission here is pretty clear but fascinating. Figure out why on earth a ready meal company is jumping into crypto. What's their actual plan? It seems quite ambitious, multi-year.
Yeah.
And maybe the biggest question, what does this one sort of seemingly odd corporate move tell us about the bigger picture? The financial trends, maybe regulatory stuff happening over there.
Okay, let's definitely unpack that. Let's start with the concrete action, the event itself. DDC Enterprise made its first official Bitcoin buy very recently, May 23rd.
May 23rd. Okay. And how much did they get in that first go?
They picked up 21 Bitcoin.
21. Not a huge round number, which is sometimes, interesting.
Well, yeah. And what's particularly fascinating, the source really highlights this, is how they got it. It wasn't like a simple cash deal.
Oh.
No, they actually acquired this initial batch of Bitcoin by giving out shares in their own company, 254,333 shares of DDC Enterprise stock.
Ah, okay. So a share swap directly for the Bitcoin. Interesting. And what was the value of that deal?
That initial transaction, the 21 BTC, was valued at about $2.28 million.
Got it. But that was just the opening move, wasn't it? They've already flagged what's next.
Exactly. Right after that, they announced plans to buy another 79 Bitcoin, they said, in the coming days.
Okay, so quick follow-up. That brings them to an even 100 Bitcoin pretty fast.
Right, 100 BTC.
But even 100 BTC, it's money, but it feels like small potatoes compared to the really big goal they've talked about.
Absolutely. If we look at the bigger picture they outlined earlier in May, their ambition is, it's way larger. DDC Enterprise plans to acquire a total of 5,000 Bitcoin.
Wow. 5,000.
Over the next 3 years.
5,000 Bitcoin over 3 years. That's a serious, sustained commitment, especially for a company known for, ready meals.
It really is. And they've even set a kind of intermediate goal within that 3-year plan.
Okay.
They're aiming to get to 500 Bitcoin before the end of 2025. So, stepping stones.
Right. Okay. 500 by end of next year, working towards 5,000. And just to put that 5,000 number in context, the article mentioned how that stacks up, right?
Yeah, it did.
Yeah.
It pointed out that if DDC held 5,000 Bitcoin today, that would place them just outside the top 10 public companies globally in terms of Bitcoin holdings.
It's outside the top 10.
Yeah. For comparison, it mentioned Metaplanet, that Japanese firm, holds around 7,800 BTC, according to the data cited. So 5,000 is significant. It shows this isn't just like a side experiment for them.
Definitely not pocket change or a casual flyer. So given how unexpected this is and the scale, how did the market take the news initially?
Well, not great at first glance. The source says DDC Enterprise shares actually closed down 14.5% on May 23rd, the day the news broke.
Ouch. Okay, a pretty sharp drop.
Although there was a small recovery after the bell. The stock went up about 2.43% to $3.79 in after-hours trading.
A little bounce, but still. And what's the bigger picture for their stock this year?
It's also worth remembering, the stock's had a rough year overall. It was already down over 27% year-to-date before this whole Bitcoin announcement.
Okay, so context is important there. But this is where it gets maybe more interesting, right? This isn't just one random company doing something weird. The source connects it to, wider trends.
Yes, exactly. The article mentions reports of increasing crypto adoption and activity within mainland China itself.
Yeah.
Which is surprising, given the official ban on crypto transactions there.
Right, despite the ban. That's interesting. And DDC isn't the only company making moves like this recently.
No, it seems not. The source gives another example. A Chinese electric vehicle retailer called Jiuzi Holdings.
An EV company. Okay, different sector entirely.
Right. And just the day before DDC's news, May 22nd, Jiuzi also approved a plan. Theirs is to buy 1,000 BTC over the next year.
1,000 Bitcoin. And how are they doing it? Similar method?
Yeah, kind of a mix. They plan to use both issuing shares, like DDC, but also some direct cash purchases. So we're seeing this strategy pop up.
Two different Chinese companies, different industries, both using company resources, including shares, to acquire significant Bitcoin holdings around the same time.
And this corporate activity seems to, fit with another trend reported earlier this month concerning wealthy investors in Asia, high net worth individuals.
What was that trend?
There were reports saying these investors are starting to shift assets away from, say, traditional U.S. dollar holdings.
Oh, interesting. Moving away from the dollar. Towards what?
Towards alternatives. Things like gold, cryptocurrencies, and even Chinese domestic assets.
Okay, so a diversification play, looking for other stores of value, maybe?
Could be. And it's possible that same thinking, that search for alternatives, is influencing corporate treasuries too.
That makes sense. And then there's the regulatory side. Things are shifting there too, particularly in Hong Kong.
Absolutely. The source flagged a really important development just last week. Hong Kong's Legislative Council actually passed a new stablecoin bill.
A stablecoin bill. Okay, what's the significance of that?
Well, it's crucial because it sets up a clear, official regulatory framework specifically for stablecoin issuers. It provides rules of the road.
Right, so it brings clarity where maybe there wasn't much before.
Exactly. And that clarity is key. It means institutions that want to work with stablecoins now have a defined pathway to do so legally.
And what's a timeline look like for that?
The expectation, according to the source, is that companies could probably start applying for licenses under this new framework by the end of this year.
Okay, so pretty soon.
Yeah. It really suggests Hong Kong is making a deliberate effort to become a, regulated and welcoming hub for certain parts of the crypto world, potentially making it easier to integrate these assets into the traditional financial system there.
Okay, so let's quickly recap this whole story because there are a few moving parts. We started with this Hong Kong-based heat and eat meal company, DDC Enterprise.
Right.
They're launching a big multi-year plan to buy 5,000 Bitcoin, kicking it off with share swaps. But this isn't happening in isolation. We're hearing about, possibly rising crypto interest in mainland China despite the ban.
Yeah.
We saw another totally different company, an EV retailer called Jiuzi, making a similar Bitcoin purchase plan.
Right, using shares and cash.
Then there's that reported trend of wealthy Asian investors shifting assets, moving some away from the U.S. dollar and towards things like crypto.
Yep, diversifying.
And underpinning some of this, perhaps, is Hong Kong actively creating clearer regulations, specifically with the new stablecoin bill.
Exactly. It all seems to be happening concurrently.
So it really makes you pause and think, doesn't it? You've got these seemingly disconnected pieces, a food company's treasury strategy, an EV seller doing something similar, wealthy individuals changing where they put their money, new regulations, and a major financial center.
Yeah, how do all these threads potentially weave together? What kind of picture does this paint about, the evolution of financial strategies and maybe asset adoption in that whole region? It's certainly something to watch.